Beneficial Ownership Information Report, or BOI, is a federal requirement aimed at increasing transparency by revealing the individuals who ultimately own, control, or benefit from a company. It's primarily designed to prevent money laundering, terrorism financing, and tax evasion by identifying the true owners of legal entities. On January 1st of 2024, a new reporting requirement went into effect that requires most small businesses, new and existing, to file a beneficial ownership information report with the state's Department of Treasury's Financial Crimes Enforcement Network. Filing deadlines. The filing deadlines for BOI reporting typically depend on the jurisdiction. For the initial filing, in the United States, under the Corporate Transparency Act, entities formed or registered on or after January 1st, 2024 must file their BOI reports within 90 days of formation or registration. Pre-existing entities, formed before January 1st, 2024, have until January 1st, 2025 to file their initial reports. Pre-existing means an entity formed 20, 30, or 60 years ago. Entities formed in 2025 will only have 30 days. Updates to BOI information. In most cases, any changes in beneficial ownership, such as the sale of shares or a change in control. Change in address for the business or owners must be reported within 30 days of the change. Who has to report? Entities required to report BOI include corporations, limited liability companies, or LLCs, limited partnerships, or LPs, and other similar entities formed with the Corporation Commission. However, exempt entities may include publicly traded companies, large regulated entities like banks, government entities, nonprofits, and certain inactive entities. In order for an entity to be considered inactive, you must have filed termination documents with the Corporation Commission. Most small to medium-sized businesses will need to comply with BOI reporting requirements. So, what exactly is a beneficial owner? Well, a beneficial owner is generally defined as an individual who owns or controls at least 25% of the equity interests in a company. They might also exercise substantial control over the company's operations or decisions, whether directly or indirectly, and they receive significant economic benefits from the company. This definition includes those who have indirect control, such as through proxy arrangements, and it can extend to family members, trustees, or other intermediaries. Now, what documents are required? To file a BOI report, the following information is typically needed for each beneficial owner: their full legal name, date of birth, current residential or business address, and a unique identification number from an acceptable identification document. This could be a passport, driver's license, or a government-issued ID. A copy of the identification document is also required and is uploaded to the government website. Additionally, the report must include details about the reporting company, such as its name, address, and formation date. So, who will have access to the report? Access to BOI is usually restricted to ensure privacy and confidentiality. Under the Corporate Transparency Act, BOI reports will be submitted to the Financial Crimes Enforcement Network, also known as FinCEN. Only certain authorized parties will have access to the BOI, such as the IRS, law enforcement agencies at the federal, state, local, and tribal levels for investigations related to financial crimes. Financial institutions will also have access for compliance with anti-money laundering and know your customer regulations. Certain regulatory agencies will have access as well. Generally, the information is not made public. The information is kept confidential, but authorized government authorities or financial institutions may use it to combat illicit activities. To summarize, BOI reporting is required to identify individuals with significant control or ownership of companies. There will be penalties for failure to file the report. Civil penalties of $500 per day that a violation continues, and up to 2 years of imprisonment. Beneficial owners are those who own 25% or more, or exercise control over a company. The required documents include personal identifying information of beneficial owners. Access to reports is limited to government authorities and financial institutions, ensuring confidentiality for business owners. Call Tangerine today to have our team of experts file report before the deadline. Visit tangerinebiz.com for more information.